Williams is the man who accompanied Sylvia Nobel to the AZTV Morning Scramble show this morning, and he's with American Precious Metals. Jerry Williams. We're going to talk about gold and how high it's going, and will it go higher? Jerry, you contend and you feel that gold is going to go higher. Give us a premise on this. Why are we feeling this? The state of the economy, the state of the world, many factors.
Many factors, including who's buying the gold. I have some charts that accompany the reason for that. They come from the World Gold Council in London. And but basically, it's going higher because the dollar is going lower. And I had an interesting chart, I don't know if we can show it or not, that shows a formation for the U.S. dollar over the past 5-6 months. And if we have that or not, I don't know.
I think we have it. That's the one we shot it upside down, and because you can turn it. No, it's the next one. Let's go to the next chart. Okay, it's the one that's a duo chart.
This one here. Oh, there
we go. Yeah.
It's upside down. Which is basically where the gold is going, but you have to look at it from right to left. Now here, this is a dollar, and it shows a technical formation called a head and shoulder, which is getting ready to break down over on the right hand side.
Why we call it head and shoulder? I don't get that. You and the doctor were saying that.
Two shoulders with a head in the middle. The head is the high part.
It does this and it peaks and
I got you. Okay.
So it's a pretty reliable chart, and if the dollar goes down, which it had started out back in May, back down to that level, then we have a sell signal. Now, if you turn that chart upside down, you get a mirror image of what gold is doing. So as the gold price, as the dollar goes down, the gold goes up. Now, if we could turn that upside down and get an up, it doesn't really matter so much as the next chart, which shows who it is that's buying. It's that color chart that says where the demand is coming from.
The one we showed right before.
Yeah, the red one.
First.
Oh, it's gone?
Then he can go back to it. And that tells us what? What's that chart?
Well, it tells us, you can see there on the left, that North America only accounts for 13% of the demand for gold. So we tend to think of ourselves as the center of the universe, when in actuality, more than half the gold is bought by India and China. They're having an off year right now over there, and that's one of the reasons that gold demand is off. But having said that, who is taking up the slack? The central buyers, chart number, whatever it is. Anyway, the one that shows this bar chart, if we have that one too.
Okay, they'll show that in a second. And that bar chart is going to show, the bar chart is showing us what?
Well, it shows us that over the past 10 or 12 years or so, central banks have been net sellers of gold. They've sold the gold to raise cash. Now suddenly they're buying gold, and here in 2010 and 2011, so far the central banks this year have bought more in 6 months than they did all of last year. So we have
is that worldwide?
Worldwide. So we're talking about the Philippines, we're talking about Russia, we're talking about countries like Bangladesh, of all places. Well, they have a lot of our money. You know, we pay for clothing and various other things that we import. And what do they do with that money? Well, they used to be buyers of treasuries. And lately, they don't show up at the auction. So most people aren't aware of this. But the biggest buyer of treasuries right now is our own Federal Reserve.
If you have a question for Jerry, the number's on the screen. Call and talk to him live about any question you have about gold. When you're talking about who's buying it, do they know something we don't know?
That's a very good question. What do they know that we don't know? What does John Paulson and George Soros know that we don't know? The two largest private hedge fund managers.
They know they're wealthy.
I know, and you have to have $1 million just to invest in either of their funds. They've taken a huge position this year in the first quarter, when gold was down in the low 1500s. Before I came on the set, it was 1670.
Right.
1676.
It was 1656 yesterday, and it's 70 today.
Right.
Yeah.
Well, in Bernanke, is it today in Jackson, Wyoming?
Just today.
The scuttle is he's going to say we need to print more money. We need to do QE3.
That's one of the reasons the price is up today. So we know that there's another round of inflation coming. We don't know. It's not going to work, but the dollar value goes down. The dollars in our wallets buy less because of all this altered creation of money. Now, gold, of course, is why would you put that in gold when there's all these other things? I have a chart here that shows the global allocation of gold. And if we can get that up there, should have that one. Overall, in the entire world, at the end of last year, there was $146 trillion worth of liquid asset or liquid investment of assets. And right in the top of that, there's this tiny little sliver of gold, which represents 1% of all those investable assets. So really, it's under-owned. And if you just have a slight movement towards away from real estate, away from stocks, money markets, whatever, the gold price literally, by definition, is going to have to explode because they're not finding that much new gold to meet the demand. Mining output peaked 10 years ago.
Even if they do, even if they would continue to find gold, that I don't think would influence the price or the value of gold that much. Even if they continue to find gold, gold's still going to hold a value.
Right. Well,
constant,
like I say, these other countries are buying it because even our own currencies aren't worth anything. I mean, look at the euro, for example. You know,
right.
They just print more, print more. That's all they know how to do. And finally, I'm gratified to see after 40 years of being around this business, being called a gold bug, a gold nut, a fanatic, we finally have some respectability. Yesterday's Wall Street Journal, big headline, gold is finally being mentioned on the Republican Party platform as a possible gold standard for our dollar.
So that would be a step back for us, a good step back.
That would be a good thing, because if you were to take, and we talked about this, Dr. Hancock and I did before we came on, if you were to take the gold that is supposedly held in the Treasury, which hasn't been audited, by the way, for about 30 years, and you divided those ounces of gold, the 257 million ounces, into the trillions of outstanding currency, you wind up with a $5,000 per ounce gold price.
Wow.
So for all the people who say, well, you can't go to a gold standard because there isn't enough gold to go around, well, sure there is at the right price, but the naysayers are out there. The people say, wow, it doesn't work. We'd all be limping around with pockets full of coins. That isn't the way we had it in 1971. It was a gold exchange.
You were still on the gold exchange.
Right.
You were on the gold standard, but you still had, obviously, the money we have today.
So there's going to be a commission established by Governor Romney, who he's promised to investigate a possible return to the gold standard. Now, this is brought on by Ron Paul. I don't know if he's going to be on that commission. Sometimes, as we said before, the best way to kill something is to start a commission to investigate it. And then this never gets out of the commission.
So they're not only going to look at the gold standard as a possibility to return to, but they're going to audit the Fed. And both of those would do what to gold?
Well, we don't know what the Fed has. We know that they have $1.4 trillion worth of our treasuries, which is the largest amount, larger than China, larger than Japan. Well, they also have toxic debt, which they've accumulated, mortgages, things like that. They're not supposed to do that. They have foreign debt. We don't even know how much. We don't really know anything about them. They're very secretive. But then these are the people who are supposedly in charge of our monetary policy.
Keeping our country afloat, and we know so very little about them.
By the way, that's a good point, because at the end of this year, there's a fiscal cliff that is being talked about a lot.
By the CBO.
Right. Things are going to change drastically. It doesn't matter who wins the election. At the end of 2013, or in 2012, beginning of next year, we're going to have changes to health care, changes to taxes, tax cuts, tax increases involving corporations and individuals. It's a little bit scary. And to keep people informed, which is basically what I'm trying to do here, I have borrowed from the Weiss research people a 30-minute video on the coming fiscal cliff. So if you go to my website and just click on the fiscal cliff, Charles Goyette, well-known economist and author, goes on for about 30 minutes and the graphics are great. The debt, money creation, all that is there.
And that's your website right there?
Yes, apmaz.com. A lot of information there.
Jerry, crystal ball. I know you have one. Oh, he also has some gold in his pocket. Always has some gold in his pocket when he comes.
I know where you're going.
Okay, crystal ball. How high do you see this going? Even before, if we return to the gold standard, then we know what it's going to be. I mean, you've given us an idea. But before then, how high do you see it going?
Well, if we don't go to the gold standard and we continue on the path we're on, where we're printing $1 trillion a year that we don't have, spending more, it's going to go higher too. And you see these quotes of $10,000. Well, if that happens, you're not going to be able to buy anything else either, because milk and groceries and gas, everything goes up. And that's what we're doing. We're creating the seeds for another runaway inflation. I've been through these cycles twice before, in the early 70s and in the late 70s, early 80s, and here we are again. Fear is what drives this market more than anything. But I'm trying to be realistic here, and I had a chart, which I don't know if we can get that up or not.
We'll just put it close.
Shows gold at the end of the year, conservative estimate of $1,850.
Oh, okay.
And for those people who think gold's too expensive, silver is a very viable alternative. I see that at 37 by the end of the year.
37.
And it's percentage-wise grown more than gold in the last 10 years.
Oh, by far. Well, people like it because it has a lower unit cost.
Right.
Because we know that silver follows gold up.
It does.
As gold
Yeah.
goes up, silver goes up.
Yeah, it's more volatile, though, because, again, it's an industrial metal,
Yeah.
subject to all the supply-demand. Gold is real money.
And every year since 2000, gold and silver end the year higher than the year before.
Except for the one hiccup there in silver in 2008.
I got you.
But, right.
14, 11, then back to 16, it looks like. Thank you, Jerry, very much for
thank you for
being
having me. Good to be
here.
here
Always
again.
love
Thank you, David.
having you. Missy Paskey Wood here, Yavapai Humane Society. You stay there.
Simplify your